We have just one more trading day before 2024, but before we get there, what are the lessons that we should learn from 2023 and what are the mistakes that we should absolutely avoid going into 2024? Let's go ahead and break it down. What I did to get this list together is I went back and looked at previous videos, went back and looked at previous comments, and just pulled together all the mistakes that I have seen people make as well as mistakes that I have made on my own so we can avoid making these mistakes next year. And here's the thing. We've talked about this before. When you make a mistake in finance, especially investing, it is going to cost you more to break even, right? And we don't want to try and make the same mistakes twice. Nobody's going to be perfect. I'm going to make some mistake in 2024. Okay, I can guarantee you I'm going to make at least one, right? So the main thing is I want to make sure I'm not going to make the exact same one. So the first one here is don't believe all headlines. Now, I can argue that this is beyond finance. It can go in any walk of life. However, there were two headlines that really threw most people for a loop, and one of them that definitely threw me for a loop. So I'll start off with my own mistake. Okay, the first one was not really believing the retail numbers. I got up here, I talked about, I think it was a study, it was either by JP Morgan or by Goldman Sachs, and they talked about how they did not expect retail spending to be as good as what it was last year and the year before. You can go back and check that video. Now, back then, I said it was an estimate that spending wasn't going to be what we expected for all the reasons we've talked about before. Inflation, people not spending as much, all that type of stuff. Well, turned out that Black Friday was the record high that we have ever seen people spend money, and the economy was a lot stronger than what most people expected. Now we'll see once this whole thing is over how well Q4 was, or how good Q4 was for the entire economy, but retail spending was fine, right? And that's one that you know I kind of bought, and I kind of just went with it. Now thankfully I didn't really make any judgments around my portfolio with it. I didn't say you should go and buy Target or you should sell Target or anything like that. In fact, I actually put out a video for the top stocks for Black Friday, and those stocks were great. Okay, so that is one. But the other one, and I think this is the one that threw most people for a loop, I would argue threw the entire country for a loop, is the 2023 recession. That was the most dominant topic the first half of 2023. The recession didn't happen. And we talked about this, I would say around May or June or so. I said, look, I don't really think it's going to be a thing. And everybody was sitting on pins and needles waiting for a recession. All the while, inflation kept coming down, gas prices came down at one point in time, and unemployment was at near a 50-year low. Hey, it didn't happen, which is good. I'm glad that we did not run into a recession. However, here's the issue, and here's the real mistake. Arranging or rearranging your entire portfolio based on headlines is a very dangerous thing. What you don't want to do is say, oh my God, people keep talking about a recession. Let me sell all my stocks and go to cash. That ain't what you want to do, right? And nobody suggested that on this channel, but you definitely don't want to do that because sometimes the headlines may not play out the exact way you expect. Should you stay informed of what's going on and kind of know what you think is going to be around the corner? Yes, but the main thing is you want to remain patient. This is exactly why I talk about when I look at my portfolio, I only look twice a year, June and December, which is right about now when I sit down and say, hey, here are the things that I want to change. Because if I said, oh, recession the first 3 months and changed my entire portfolio, I would have been completely wrong and lost money the first half and then said everything about retail spending and then bought and sold stuff then and would have been wrong in both cases. So you want to make sure that you have rules for your portfolio, and just because you see a headline, just because you read a headline, it doesn't always mean that you have to do anything. We talk about that on this channel as well. Next one is don't do the meme stocks. Okay, the meme stock era is over. I guess I'm sorry, I don't really know, okay? From 2020 to 2021, there were times where you could blindly pick a broke, poor company and make a whole lot of money. It is more difficult now to do that, and I would argue you never should have been doing it to begin with. A great example of this is Mullen Automotive. Today, at the day I'm doing this video, Mullen Automotive, ironically enough, is up nearly 30% today. 2 days ago, it was also down about 30%. It's just a difficult ride for new investors to get on, and it's more akin to gambling than actually owning an investment where you know over time the stock is going to rise. I'll tell you right now, a quick shortcut on whether you should buy a stock or not. One of those is just look at the last year. If a stock is down 99%, it's probably not one that you want to truly invest in. I'm just say that. Okay, now there are going to be pages and people, perhaps in a comment on Reddit or wherever else, that say, hey, if you put a whole bunch of money in it and it's really cheap, something could happen and you could get rich overnight. That's possible, right? It is possible, but it's just unlikely. There is a reason why the vast majority of investors are invested in Microsoft and Apple and all the companies you actually know that have been sustainable and have been growing for decades and not just 2 months out of the year or something like that. The next one here, be careful around crypto. Okay, now I did an entire video yesterday about crypto and what I think it's going to do in 2024. I would encourage you, if you haven't watched it, go ahead and watch that one as well. But we saw what happened to Sam Bankman-Fried and FTX. We saw what happened to Celsius, which was supposed to be some sort of crypto bank. I lost money in Celsius. However, how did I protect myself? Well, just like I told y'all yesterday, I didn't put a whole bunch of money in it. Okay, I just put just a little bit, and a little bit is gone. Do I want that money back? Yes, I do, right? But it wasn't enough to, it wasn't my life savings. It wasn't a significant amount where it hurt me enough to have to rearrange my entire life or anything like that. You want to make sure that you have something similar. Now, I'm not the biggest crypto expert to tell you to do the cold storage, the cold wallet, or whatever. I would direct you to other sources if that's what you want to do, which they suggest you should do. But in either case, you need to protect yourself in some way. Don't invest too much, or don't invest an amount where you are not willing to lose. Have that extra storage option. Don't do it at all, or only go with trusted companies. One of those 3 or 4 options you need to make sure that you're doing, because again, we have seen what happened in 2023. You definitely don't want to repeat those mistakes going into 2024. And I do expect crypto to do well in 2024. So this might be the time to kind of get your ducks in a row to protect yourself now before you move into the new year. Now, I'm going to pause real quick before we move on to the next 2. For those that don't know, there's a lot of resources in the description below. In fact, one of those is my free guide. It's a PDF. It's been there for like 6 weeks. I haven't really talked about it, but it's how to start investing in 20 minutes. If you're new to the channel, this is your guide on how you can start investing and buying and selling stocks real quick and easy. If you can read really fast, you probably do it in 5 minutes, because it's only like 3 or 4 pages long for the PDF guide. Also, go ahead and hit that subscribe button. We are this close to 7,000 subscribers. All right, back to our regularly scheduled programming. Next one here is investing doesn't have to be exciting. Okay, there's a school of thought where you got to wake up, check your stocks, make some moves, and just be on it and do stuff all the time, every single day. You don't have to do that. I would argue that, again, Microsoft is perhaps one of the most boring companies out there. PACCAR, a company that I put nearly $10,000 of my own money in, did a video about that. It's extremely boring. They make trucks and manufacturing equipment. It is boring, very, very boring. But it makes money, okay? That is the objective, is for you to make money. Your objective should not be to be entertained by the stock market, okay? You can be entertained by me, but you don't want to be entertained by the stock market or by your portfolio. I would argue just let stuff alone. We've talked about this plenty of times as well. I only check my portfolio twice per year, June and December, and that's it. I'm not staring at my account every day. I don't have to, because one, I know I'm investing in things that are quality. I know I'm investing in things that do grow over time, and I don't want to overcorrect or overreact to a particular headline, which we talked about earlier, or just a bad day that may have occurred on the day I just happened to open my investing account. It's a major mistake that throws so many people off, even those who are seasoned, because they're checking their accounts each and every day. You don't want to do that. You don't want to be entertained by your investing app. That is not what it is there for, regardless of the notifications and things that you may get. One way to get around that is just turn off the notifications. For me, something that I do is I have mine on work mode. So after I drop off the kids, between 10 and 5 p.m., I don't get any notifications unless my wife or my mom or my dad calls me. That's it. Literally, that is it. So if you have been trying to call me or email me and I don't answer during those hours, that's why, because it's on work mode. I don't know what's going on unless I am specifically looking and seeking for it. So turn off your notifications if you have to, because you do not need to be entertained by the stock market itself. Next one here is not knowing the rules. Okay, when I say not knowing the rules, that is not reading and understanding what exactly you're investing in and getting upset and mad that something occurred. This happens often when there is some sort of stock split, or if there is some pause or merger with the company that you own. So for example, in 2021, there were several companies that were doing stock splits. We cover them all on this here channel. And the thing is, when these stock splits occur, we usually know these, I was going to say years, we usually know these weeks in advance. They don't just happen overnight. So for example, let's say that you have a 5-to-1 stock split. Okay, I have 20 shares of this company. They're doing a 5-to-1 stock split, which means they're going to take that 20, divided by 5, I'm only going to have 4 shares. Well, when that happens, you get some people say, hey, this app stole my shares. I don't know where they put them. I need my shares back because my stock is up 20% or 500% and I need it back now. I'm trying to sell now and they stole them from me. And then you get upset. You don't like the stock market anymore. You log off your app and you just close your account. Where's the thing? It was a stock split. That's how stock splits work. Okay? That is normal. The thing is, you may not have read about what happened with the company and all the announcements that they've had before. I've seen some cases where a company is delisted from the stock market and they'll say, hey, look, I'm checking my portfolio and this stock is not here. Where did it go? It was delisted. I've seen other cases, and this happened with Twitter/X, was hey, I used to own shares of Twitter. Where did it go? Well, Elon Musk bought it. So he gave you the $40 it was per share, whatever it was, and now you no longer have the stock. It's his now. That is how this works. But when you don't do that, that shows that you did not actually read or understand what you were investing in. And that's definitely a mistake you want to avoid in 2024. Now we got to argue, in any single year, you absolutely want to avoid those mistakes because they can cost you. If you are investing in a company that's doing a reverse stock split, we've talked about that. That's when they multiply the number of shares. That is usually a bad sign. It's a sign that the company is not financially stable and they're trying to appear more stable than they are, which again, if you had to do that, you're probably not a great stock to invest in. So you make sure that you're making those, I would say, making those steps in research so that you know what is going on in advance. But how do you do that, right? What are the best ways to research? What are the best ways to understand what you're getting into before you get it? Well, guess what? I have got the perfect resource for you, and it's actually in a playlist on this here channel. Everything you need to know for beginners when it comes to stock market is right here.